Hey traders from around the world, what's going on? It's me, Jeremy Alexander Newsome with Real Life Trading. Hope you're doing absolutely most wonderfully, stupendously, fantastically superb. It is indeed Monday, the 9th of January in the year 2017. Hope you're doing absolutely fantastic. I'll make this review pretty quick because actually you should be receiving about over 3 hours worth of content in just a few moments from the Mentorship Monday today. So you'll be getting that in an email, and you'll also be seeing that posted on our YouTube channel. So make sure to keep an eye out for that. You'll be getting an idea and a review and a glimpse into our live day trading room where we had over 100 people join us. It's one of the best, quickest, fastest, most exciting growing rooms on the internet. So I hope you can all be a part of it. I'm really pumped, pleased, and privileged, and honored, and humbled, and blessed to be trading with each and every one of you single people every single day. I absolutely love it. So let's talk about the SPY really quickly. SPY, not too much happening today. I mentioned on Friday that we're going to be expecting a small retest on Monday and likely a pop higher on Tuesday, Wednesday is what I'm going to put in here. Now the cool part is if we do not pop bullish, and I do mean like Tuesday or Wednesday, if we do not pop bullish, I think one of two things happen. Thing number one, we continue to trade sideways to down a little bit, like this. So if we don't pop bullish Tuesday, Wednesday, we do something a little bit more like this. We kind of trade down and we start getting a little bit just neutral, but slightly bearish. So neutral on the intermediate scale, bullish on the primary trend, and just slightly bearish on the minor level, the short-term trades. So that's kind of what I'm expecting on the SPY. Beautiful inside day candle today. Here's your hourly charts, and your hourly charts so far. Let me turn off all the extended hours. They look pretty good. Here's your kind of long-term moving averages. So this resistance, very, very nice. Old support, new resistance. We broke above that. We retested. So if we break above the high of today, we start breaking above 227.16, especially later tomorrow or Wednesday, I will be a little bit more bullish on the SPY. So that's pretty much what we got on that. The Dow today did not break 20,000 again. So we had a look at this candle. Look at that. Look at that thing. It's so tiny. Very, very small candle. The open and the close, I mean, almost the exact same. So we do have some earnings coming into this week, but very, very good sideways action right here. Pressure is building, but volume was abysmal today. So maybe we have slower volume coming into earnings. This is a little shocking that there's no volume. So if there's no volume tomorrow, it'll be another light day of trading for me, at least. But that's the Dow Jones Industrial. Here's the Qs. The Qs did make a new all-time high today. And, we have 1, 2, 3, 4, 5 white candles in a row. So if you're looking at playing this bullish, this is not, in my opinion, the time to buy. If you're looking at playing the Qs, look for this pullback, which is interesting because that correlates very closely to my analysis on Apple and Facebook. Apple, ladies and gentlemen, is breaking out, and it broke out officially today. Yes, let me rephrase what I just said. It did break out officially today. The Apple made a higher high and a higher low. So what next, Jeremy? Well, I will be keeping a very close eye on Apple this week and next week to do something like this of some magnitude, a pullback of some sort, which would likely be buyable coming into earnings. So if I take any trade on Apple, it'll probably be February week 1 or January week 4 or something, kind of call options. I am watching this one. If you have some shares, I'll do like the 130 February covered calls. Wouldn't mind getting exercise up there. But here's your weekly chart on Apple. And so far today and this week, we did close above this resistance. So a little bit of a pullback would likely be a buying opportunity. And we'll see what continues to happen on Apple. Facebook, also a big mover today. One of the most popularly talked about stocks today in the trading room is Facebook. So when you get that recording, make sure to check out my analysis on Facebook and you'll see how it coincides with what I'm thinking. Here on a daily chart, shout outs to Mike, John McKay, Amy, Justin Linderman, Justin Jeffrey, Patricia, Melanie, and many other traders who did trade Facebook bullish on this candle right here. I'm sure you've all seen that candle before, those who subscribe to the real life trading method of technologies and candlesticks and analysis. That is, of course, the one white soldier candle at a support. Beautiful buying opportunity, great bounce, and this is looking like a W, double bottom on Facebook. So Mikey from Australia and a few other traders were looking at going bearish on Facebook today. I do not disagree with that. I do think this is a good level. We've gone bearish before up here at this particular price, about 125, and that happened right about here. My only thoughts on Facebook is if we do have a bearish day, it might be 2 to 3 days at most down to the 200 where it probably bounces again as a retest of that neckline. So going forward the next 2 to 3 weeks, that's 2 to 3 weeks, well, maybe. But the next 2 to 3 days, kind of keep an eye out for that on Facebook. But overall, beautiful double bottom, great volume. Everything looks good on all time frames for a little bit of a bullish continuation if and when Facebook pulls back. Adrian's got a great put sale down here on 110 on Facebook, expiring not this Friday, but next Friday. So that is Facebook. Here is Netflix, NFLX, and Netflix chilling at this all-time high resistance. My boy Dean Chance, a.k.a. the Chancellor, has a 117 put sale expiring this Friday. Here's your weekly chart. Again, all-time high on Netflix, ladies and gentlemen. We made it on Friday. So we're going to hang out here for a little bit. Earnings is coming up on Netflix. Can't believe I'm saying that already, but earnings, folks, is right around the corner. And I'm so excited and thrilled to be trading with a lot of new traders, hopefully, over the earnings season. So, on Netflix, a bunch of bearish candles last 2 days. Looks like an evening star reversal pattern. You have two choices on trading Netflix. Choice number 1, be patient, do nothing. Choice number 2, wait for the bullish dip and then buy it. And, of course, maybe choice 2.5. If you're really actively trading, you could look to trade it bearish on a day trade level. But I'm personally not going to do anything on Facebook until earnings, which are going to be next week once I get back from Hawaii. So that's Netflix. And then the banks are going to be reporting earnings this week. Bank of America, my analysis is if Bank of America opens at 23.45 or above, I'm bullish on it. If it opens below 21.60 and 21.20 range, I'm slightly bearish on Bank of America, but I will be looking to buy the dip. The truth of the matter is, on Bank of America, JP Morgan, my good friend Angela was actually talking about a pennant pattern today, and you'll see in the recordings that we're talking a lot about pennants. Bank of America does have a pennant. So the fact of the matter is, it is bullish, yes, and if it does gap up, it likely will continue higher. But if it does not gap up or gap down, then Bank of America will likely continue trading sideways for the next few weeks after earnings because it has already experienced such a megalithrically strong bullish move from October. And we're talking massive gains on Bank of America in just the last 2-3 months. So as it just continues to trade sideways in here, that's my guess, depending on the gap, if it gaps down on earnings. If it gaps down right here to this 50 exponential, I will be bullish. I think it's in a strong bullish trend, and it's a buy the dip opportunity. The exact same thing is true with JP Morgan. It's going to be all about the gap. I'm all about that gap, no candle. So on JP Morgan, depending on how it gaps, if it gaps down below 83.52, I will be bearish on it, depending on the open of the range. So if you want to be there with me on Friday during most of these financial gaps, tune in. This week is entirely free. You'll be getting links again from me in your email. And if you don't get them, please email me, jeremy@reallifetrading.com. I'll be happy to forward them to you. But this week, big deal, ladies and gentlemen. Earnings season's here. Enrichment season's here. Open house for Real Life Trading is here. We're shaking the world. We're shaking the very stock market education system by its core. Ladies and gentlemen, our mission is to enrich lives. Thanks so much for watching this video. And until next time, which will be Wednesday, love life, live life, and trade it. Bye-bye.